economy is going through major changes. Many experts believe we may see a crash soon. Real estate prices have gone up a lot, and people are still rushing to buy homes. However, not everyone understands the risks. When inflation rises, it helps the rich, but it hurts the poor. This is because the cost of living increases, and low-income families struggle to keep up. Government policies like stopping oil production can make inflation worse by raising energy prices. People are spending money without thinking about how debt is growing in the system. Debt and credit are two sides of the same coin. When debt rises too much, the system becomes unstable. The Federal Reserve used to print a lot of money to support the economy, but now they're pulling back. This can make things worse. If people stop spending and prices fall, businesses may suffer. Some real estate investors may lose money, especially if they bought at high prices. It's important to learn how money, debt, and inflation work before making big decisions. Using debt wisely can help you grow wealth, but misusing it can lead to losses. Many people bought property thinking the value would keep going up. But real estate is not like stocks. It's not easy to sell quickly. That's why people should be careful before jumping in. Just because something worked in the past doesn't mean it will work again. Inflation doesn't hurt everyone equally. The wealthy have assets that rise in value. The poor often spend most of their income on basic needs and they feel the pressure more. High inflation also leads to higher interest rates. This makes borrowing more expensive, which slows down the economy. In recent years, the government printed large amounts of money. This helped keep things stable during crises, but it also increased the risk of inflation. Now, with prices rising, the government is pulling back on spending. The Federal Reserve is now trying to remove money from the system instead of adding more. This is called quantitative tightening. When the Fed prints money, asset prices go up. When it removes money, asset prices tend to fall. This affects stocks, bonds, and real estate. Investors feel less wealthy and may spend less money. When spending drops, the economy slows down. Many people rely on their investments to retire. If markets crash, their retirement plans could be at risk. This is especially true for those who depend on 401ks. These savings accounts can lose a lot of value if the market drops suddenly. It's also important to understand that credit and debt are linked. One person's loan is another person's debt. The more the system depends on borrowing, the more fragile it becomes. In the past, credit was tied to gold, which limited how much could be borrowed. Now, without that system, borrowing has exploded. Credit is how banks and governments support the economy, but too much credit can create bubbles. These bubbles pop when the money stops flowing. That's why understanding how credit works is so important. The system we have today is based more on borrowing than on producing real goods. In the past, economies grew through saving and investing. Now, they grow by borrowing and spending. This makes us more dependent on low interest rates and government programs. If credit stops growing, the economy could fall into a deep recession or even a depression. People used to build businesses slowly using money they had saved. Now, most companies rely on loans to expand. If borrowing becomes harder, many businesses may stop growing or even shut down. Many young people today have never seen a downturn. They think the market always goes up, but those who've been around longer know that markets go in cycles. There are booms and there are crashes. The smart investor prepares for both. Experience teaches us that what goes up can also come down. A strong economy can change quickly, so it's important to stay ready. That means building a plan that can survive the bad times too. Some people buy real estate to flip it quickly. They hope to sell at a higher price and make a profit. But this only works when prices are rising. If the market slows down or interest rates rise, those profits can disappear fast. Flipping also comes with extra costs like repairs, taxes, and closing fees. If those are not managed well, they eat up the profit. Many flippers end up with losses instead of gains. Real estate works best when it provides regular income, what we call cash flow. Buying with the hope of selling for a quick gain is risky. Many people learned this lesson the hard way during past crashes. It's also important to understand how government debt works. The US dollar and other currencies are based on debt. They don't have value unless someone borrows. That's why the system rewards borrowing. The more debt you use wisely, the more wealth you can build. However, using debt without understanding it can lead to disaster. That's why some advisors tell people to live without debt. This is good advice for those who don't understand finance. But for those who do, smart use of debt is a powerful tool. People often think they need money to make money, but that's not always true. With the right knowledge and strategy, you can use other people's money to invest. This is how many wealthy people grow their assets. As interest rates rise, real estate becomes more risky. Investors need to check their numbers carefully. Can they still make money if the cost of borrowing goes up? Can they handle a drop in property values? Office buildings in particular are facing trouble. Many are empty or losing value. Some cities are even offering money to turn office buildings into apartments. This shows how serious the problem has become. More debt is coming due in the next few years. If those loans can't be repaid, more defaults will follow. This could lead to another real estate crisis. Investors need to be prepared still. Hard times can bring great opportunities. When prices drop, smart investors step in, but only if they know what they're doing. Jumping into a falling market without a plan is a mistake. It's easy to get caught up in hype. People see others making money and want to join in, but by the time most people notice an opportunity, it's already too late. That's why planning and research are so important. People often blame their situation on not having money. But the truth is, knowledge is more important than money. When you know what you're doing, you can find ways to invest, even with little money. Real estate isn't like buying stocks. You can't sell quickly if things go wrong. And that's why you must think long-term. You need to be sure the property will bring in income, even during tough times. Many people followed popular advice without understanding the risks. They bought property when prices were high, thinking they would always rise. Now, they are stuck with homes they can't sell or rent. It's important to learn from these mistakes. Don't buy just because others are buying. Wait for the right time. Study the market, know your numbers, and always plan for the worst-case scenario. The economy is changing fast. Inflation, interest rates, and debt are reshaping the world. People who ignore these changes will face problems, but those who prepare can find success. Make smart choices. Learn about money, debt, and investing. Focus on building steady income. Use debt carefully. Don't follow the crowd. Do your own research. When things are uncertain, the best plan is to stay informed and act carefully. The people who survive and grow during a crisis are not the ones who panic. They're the ones who prepare. There's a saying, your profit is made when you buy, not when you sell. That means you need to buy at a good price, not just hope it will go up. That's how real investors think. Don't rely only on what others say. Test their ideas. Do your homework. The more you learn, the safer your choices become. Inflation may stay high for some time. That means your money loses value every year. You need to invest in things that rise with inflation, like real estate, gold, or strong businesses. If you keep all your money in cash, it will slowly lose value. That's why many people prefer to hold real assets. But again, you must know what you're doing. There will always be people selling quick fix solutions. Be careful. Some gurus want to sell you courses or systems that don't work. Ask questions. Think for yourself. Times are changing, but opportunities still exist. Stay alert, stay curious, and most of all, stay prepared. Like and subscribe to our channel for more useful insight tips.